Okay, welcome back to another episode of Profit Playbook. Today we have a very, very, very special guest. It's Kirsten, one of our affiliates from a long time, and she's been really, really great to us at FX Replay. And so, yeah, we appreciate her a ton. So, Kirsten, thank you so, so much for joining us. Really, really grateful to have you here.
Thank you. Appreciate it.
No
Love to be here.
worries. No worries. And so, I mean, firstly, the first question that I had actually, because your group is called 5D Universe, and I was curious as to why. It's an interesting name, and I'm curious as to why you named it that.
Well, that's really funny because last week someone asked me that, and I think I had a really good explanation. But because I shared it in my Telegram group, so let me
let's
check
see.
because I think that was the best explanation I could give. Here it is. I said, well, I do a lot of personal work and also spiritual development, and I love looking at things in dimensions. So the fifth dimension is having the consciousness you are part of a bigger universe where ego gets tempered and sovereignty is remembered. So the fifth dimension universe. That's where it's coming from.
I love that. And it's so, I mean, with trading, it's kind of like you have to be at this equilibrium point. And I feel like a lot of people that walk the trading path are kind of get involved in spirituality as well. Because I mean, you really have to learn a lot about yourself and what you're good at and what you're not good at, and be able to manage those, right?
Definitely. And to put that in a more like earthy kind of matter, I love to live by the phrase, nothing to hide, nothing to prove. And that's a really hard one to get to the equilibrium of that. But if you are there in between, so you feel like you have nothing to hide and nothing to prove to anyone, and not yourself, most importantly, that's where you can live like a really centered life. And you are relaxed and chill. You have a clean mind, clean heart. And I really believe that all those, kind of equilibriums matter. It matters in trading, but it matters in your personality. Definitely.
Absolutely. No, I love that.
Yeah.
I love that. And you can tell you have this Zen energy about you, and it's nice to be around.
But yeah, I've done so much personal work, and I've been most people, of course, don't know me, but I've been an entrepreneur for 19 years already, and I think entrepreneurship, since 2005, and entrepreneurship, I believe, is one of the biggest personal development processes you can encounter with yourself. However, trading brought a new dimension, I must say. But yeah, I'm used to also since 2017, I've been coaching a lot of entrepreneurs. So nice. I know a lot about people and how they operate and how they think and how they
and I'm sure through that you've seen a lot, because there's a lot of similarities on the journey from entrepreneurship and trading. Definitely. And you've probably seen a lot of people coping with failing and not coping with failing. And so that must be an interesting experience just to view that. Because likewise, I have a group of traders that I was teaching, 30 traders directly, and you get to see very similar things and similar patterns in traders and the way that they handle things, the way that they journal their trades, if they even journal their trades, the way they do have certain actions or take certain actions.
Yeah, definitely. And also what I think is a great similarity, I was already used to, first of all, do a lot of journaling, but also on the personal side. But also in entrepreneurship, you need to measure your KPIs. So it's so important to know what your numbers are, which numbers are you going to work on next upcoming month to reach your goals. The only thing that's like completely different from trading is that in entrepreneurship, I'm like a go-getter. I go for it. But in trading, that was a thing that I just went up through walls because I was impatient. And in entrepreneurship, that actually helps because you just go. Even if you fail, you just go. You're like, nah, I'm going to fix this. I'm going to fix this. But in trading, you cannot fix anything by grinding more. It's just not how it works.
Exactly. It almost feels, the way that I described it, is it's almost like a retired lifestyle that you have to get used to in trading. And entrepreneurship is the exact opposite, and it's just go. And you're right, like it's really, really hard to break that, especially if you're like part of who your identity, and you're always just, I work 16 hours a day and I'm pushing and I'm doing this and I'm doing that. And then you go into trading where it's like, Okay, well, I have to actually be patient. Actually, if I don't press buttons, it's probably better, right?
Yeah.
If my strategy isn't presenting, I think, that's a big key. And in where you should be putting the work, it should be on the back testing and on the, on the looking at your journal and improving things and studying your data. I think that's where the grinding has to come in play. But when you're actively trading, it has to be very even keeled and very, little work actually that's involved with it, right? And that's why I guess why it's so addicting, or why it's so so many people want it, right?
Yeah. And the funny thing is, in entrepreneurship, I already had let me put it like this: I had a really good zen while always knowing how to find new solutions if I was encountering some kind of problem. But in trading, you really need to back off. You need to say, all right, this is not going to work, and the solution is not looking for a solution right now. So you need to really back off and just stay put, do some other things, make sure you get grounded again, you get the clean heart, clean mind. I really believe in trading, it's so important to be the best decision maker you can be. And what do you need to do to be a really good decision maker? And that depends, of course, on the person, on the avatar you need to be for that to happen.
Absolutely. No, that is such a huge key. I think that is an absolutely massive key. And it's knowing yourself, knowing how you do things and how you operate at your peak, right? Because the way that you operate at your peak may be different from the way I do. I know people that wake up and trade immediately. They wake up and they're like, oh yeah, they can trade on their phone, whatever, and they're done. That's just not the way that I am. I need to be really, really kind of at peace. I need to, have my routine going and be zoned in. And then once that happens, then we're all good to go. But it's crazy. And focusing on the KPIs, I think, is really, really important too. And I just had a question for you, because I know people will probably be asking. And I know in my journey, it was really frustrating not knowing what to do or what to track, because it's track your data or do this or do that. But you're just I'm not entirely sure what I should be doing to improve. And so I think it'd be really beneficial if you kind of dive into a little bit of what are specific KPIs that you think that, as a beginner, what should they be tracking, or how can they, improve and actually genuinely get better as a trader?
I think you can only improve on a few things. So that is either getting right on bias. First of all, I think it's the most helpful thing if you learn how to trade with the trend, because you encounter less problems than counter trend. Of course, if you're a really good scalper, you can do everything. However, really knowing what the trend is, and first do maybe a backtesting session on that. Just look at the higher time frame trends and see what's going on, and maybe do it in a swing way, and first finding that one out. And then when you become a little bit better at that, you can start to refine things and maybe go to a lower time frame and see, all right, if this is the bigger high time frame trend, can I spot kind of setups for a lower time frame? And of course, I'm an ICT trader, so ICT concepts trader. I know a lot. I think even you are an ICT concept trader. So there are, of course, a lot of people that look through the filter of ICT concepts, because, of course, every strategy is just a filter, and they all work or they all don't work, depending on how you trade them, how you track them. And so I think it's really important that you find your style, because I've done a lot. I started in crypto in 2020. 2020. And I started with all kinds of indicators, the VWAP and the RSI, all the things we start out with. And I ended up at ICT. But that was because it resonated, because I found that my setups became better and better and better, and I started refining it and became better. So I think it starts with defining trends and then looking, all right, what kind of strategy resonates with me? So am I more like an indicator trader, or am I more like a naked chart trader? And really start to define, all right, what is my model in this? And do I have a personality of a scalper? I want to get in and fast and get out fast, and that helps to clean my mind. Or am I more like the person that's able to keep a trade for days and not look at it and just trust it? because a lot of people are not able to do that. They just keep looking at their phones and messing up their personal lives and making shit out of it because they're just simply not connected anymore to the rest of their life. So you really need to make that decision. What kind of trader am I? I want to intraday trade for just a few hours, scalping for just maybe half an hour even, or am I more a trader that's more at ease if I go for the bigger flows and I'm okay with leaving a trade open overnight. So I think those are the most important things to look at.
Yeah,
at first.
I love that. I love
then
that.
You can refine.
Exactly. And I think that you need to have that base first. And like if you're mixing things up, because I know that this is a problem that I ran into as well. I've been trading for 7 years now. So it's, I've probably experienced every single trading problem from losing large amounts of money to whatever else there is.
We all did, right?
Exactly, right? So we've all been through it. And, through that process, I think a lot of it was just being confused, or in the beginning, at least, I was confused on what type of trader I wanted to be, or that was resonating with my personality. Like I would have some trades where I took intraday and it was like intraday scalps, and then some trades I'm leaving for a couple days. And because of that, it's like you're kind of lose your identity, and you need to know exactly what you do every day. You have to be so incredibly confident in what you do. And in order to do that, you have to do the same thing consistently, and you have to be executing consistently over and over and over again until you build that confidence. That's the only way to do it. And I think knowing your identity, knowing what you trade, like what your strategy is, and knowing that intimately, like I think that's the only way to do it. And that's a great place to start.
Definitely. Yeah, and also from that, so if you're still like finding things out, finding your method or your process or your edge, I would still, and I did not do that, but I would recommend it. But most people don't do. They do it exactly like me. They just keep hopping strategies, and in the end, ending up using it all in the same way. So, or at least they get it mixed up. And that was one thing I really struggled with in the beginning, because then I saw that and I was like, oh, that's that strategy. And then just started mixing it up with other stuff. And then in the end, nothing worked. So I would really recommend with something like FX Replay to do strategy backtesting sessions and just train your eyes until you know for sure that you can see that setup and you get the data on it. And then after you did 1 month of that strategy, 1 month of the other, 1 month of that, then you can decide, all right, which one resonated with me the most? Which one fits me? Which one can I see easily? And don't mix them up. That's just horrible. Been there. You cannot do like swing trading while you're scalping or the other way around, but also like different entry models, different TP models, whatever. And you cannot mix up higher time frame and lower time frame strategies. Of course, everything's fractal, but if you go in there with a scalping mindset for a swing position, you're probably getting stopped out.
Agreed. That's it. And like honestly, I'm so glad you said that, because it's about that, like the time frame process for me that I think I would, if I were to attribute like a single point of like, oh wow, this was really changed my trading, it was going from one time frame, higher time frame, to a lower, and like waiting for something specific on the higher time frame before going to the lower, and then waiting something for on that time frame to go to the lower. And the thing is when you're position trading or swing trading, and then all of a sudden you hop down to the 1 minute because it's in line with your swing trade. It's like no, you're skipping the process. It's really important to wait for specific things on each of the time frames, and then that validates your entry model, and then that's where you enter, and then you let the trade go. But it really does have to be in alignment. That's a major thing that at least I've learned.
Absolutely. And one of the bigger mistakes I made was that I, for example, see ICT then trading on a 1 minute, but I was like, oh, I see this entry right now. And then I entered, and then I wanted like the freaking how many ticks moves, because I thought, well, it can go there, right?
Exactly.
And then of course it would run to at least 3R and then come back and then stop me out in a loss, right?
Yeah.
And those are, you need to go through them.
You have to.
I always also tell like my coaching clients, like the thing is with everything. And I'm also a musician, so I know what it is to train. And sometimes I hate it, but if you want to learn a skill, you need to train. You cannot do it overnight. I could not have played the piano overnight. So I always keep that in mind. All right, I need to give this some time and really do the training, not only stare at the charts, but train myself. But the thing is, like with every skill, I try to remember myself like, all right, I need to probably make at least 100 mistakes, like everyone has to, because otherwise I cannot learn it. So now the only thing I need to decide is how fast do I want to make the 100 mistakes.
I love that. I absolutely love that.
Yeah, that really helps.
Totally. And I've always used, there's, once I learned about Thomas Edison. Thomas Edison. So when he made the light bulb, it took 10,000 iterations to make that light bulb. And so if you think of your success, like, wow, if it takes 10,000 failures for you to achieve your light bulb, then like it's kind of empowering, because it just means that, hey, I'm 10,000 mistakes away from achieving my goal, my light bulb. And so let's make those mistakes. Like, let's not be afraid of those. Let's actually count them and track them and see how many it actually takes to get there. And so it's kind of used in a positive light. And I did the exact same thing. I was just like, you know what? I'm going to change my mindset about failing, and let's just focus on failing frequently and failing fast and failing in a smart way. And I think that's why FX Replay is really why we made it initially, was because it's like, man, we really want to make trader profitable. We really want to help that. And if you can fail without losing money in trading, and then so that when you're trading live capital, you're already, 10 steps ahead, like, wow, that's pretty incredible.
Yeah. And I actually always say you have the choice between two F words, and not the one YouTube doesn't like. You can either choose failure or you can choose feedback. Mm-hmm. And I think that's the more helpful and useful word to think of. So it's not like I failed. No, it's like, I got a piece of data here and that doesn't match with what I expected. That's feedback. 10 years ago, I was it's a totally different world, but I was a sound engineer and in the music world. So I was always on tour and doing the technical stuff, right?
No way.
But yeah, definitely for like big artists here in Holland. So I was a sound engineer for 10 years. And the funny thing is, what I actually took from that is when you do like a sound check and you have all the cables in and all the mics and everything, when you're doing a sound check and suddenly you hear like a cracking noise, it's not like, oh my God, I did something wrong. It's me. I failed. No, you're like, how can we solve this? All right.
Exactly.
So is it the cable? Is it the mic? Is it that line? Is it that line? Is it that line? You just go through it every step. It's not here. All right. Is the disconnect here? No, it's here. Yes. Solved. There it is. So it's just going down the line. Where is it not going well? And where is it off? Off, not me.
Exactly.
So in trading also, where is it off? Not you. It's not you. Totally. Just make sure you fix it.
The thing is, though, with trading that makes it so hard is that there's a dollar value associated with it, right? And it's saying if it's a negative, or if you lose a trade, that's literally saying, wow, you made a negative $1,000 mistake. That's you that made that mistake. And so that's where people get that mix up in that, again, that with the identity, it's like, oh, I'm a failure, as opposed to it being like, no, I just failed. And there's a difference between failing in actually giving up and saying, no, I'm a failure. Like, you can fail and that's completely fine. That's the cost of the opportunity, and that's okay.
Definitely. And the thing also is, don't, of course, identify with mistakes, but just say, all right, I got some data feedback. Just see it like a freaking computer. Just see yourself as like a machine that gets some data. And besides that, money is nothing but a number. Mm-hmm. So a 1 with 3 zeros, we call it $1,000 or something like that. And if I would tell you, go get a coffee for $1,000, you're like, what? I'm not going to get a coffee that costs $1,000. That's way too much. And if I say, go get a car for $1,000, you would say, that's impossible. Do you want like a Flintstone car, or what do you want? So it's perception. Mm-hmm. It's a 1 with 3 zeros. It's nothing. But because we form a perception around it, it suddenly becomes something that like fires us up or puts us off. It's just weird how it works. Once you start deciphering that, it's just you and you have a few numbers and that's it. It doesn't identify you. It doesn't devalue you because it's not like you are worth nothing anymore because we're all worth the same as we were born. It's not like when you get a kid or something like that and you look at the baby, no, you're not worth shit until you reach your, I don't know, your college degree and your blah, blah, blah. Then you are someone. No.
But why do you think that is? Like, why do you think it is that we associate like trades with our identity or like the value of money? Why do you think we value money and associate that with our identity? Like, why do you think that is?
Yeah, that is because the whole system, of course, raises us to think that we are worth nothing until we become something. And something a lot of the times is that we're doing really good at our jobs and earning money. But if you think about it, we're the only freaking creatures here in the world that need to pay to live on this planet, right? It's like the weirdest thing ever. It's not like the animals in Africa are like, oh, I need to pay my dues and my debts and my whatever. No, they just live here. And we're like grinding and doing all kind of stupid stuff to make sure we can live here on this planet. We were born in the first place. So it's not like we have a choice or something. So it's of course the whole matrix, the whole system, the whatever. And in the end, we just need to make it work and see money as a fuel, not as an end goal. That's definitely hell for your life. But as a fuel for opportunities to experience life in a better way. But therefore, we of course have a lot of let's call them money blocks, of course, how you were raised and stuff like that. So we all have our own view of money and our maybe unconscious beliefs and thoughts about money, and those get triggered in trading.
Those get triggered hardcore. I'm from hardcore. My parents are from Italy. I'm come from an immigrant family, so you're under the immigrant mentality, or at least from back then. My grandmother as well, and they were, or my grandmother was like at the end of the war, essentially. So she was taught, preserve everything about preservation as opposed to flourishing. And so that gets carried down. And honestly, even sometimes I remember when I first started making money that I was just trying to hoard everything. And like money is energy. And if you block all the full circle of how it's supposed to flow, both in and out, you really restrict money coming in. And so you have to understand that it is what it is. It's just a tool, and it comes and it goes, and you have to be okay with letting it go and through that accepting it as well. And that completes the whole cycle. And the more money you make, I feel you start to, or that becomes a little bit more clear, and you start to realize, where I used to spend $100 on a bill, and I was like, oh my God, that's so much. And now it's like, oh, that's like just without even thinking, it's just stuff like that that happens over time. And it's the same thing with trading. You start taking, I remember taking, $5 losses in trading and being incredibly overwhelmed. Like, oh my God, that's $5. I lost that in 2 minutes. Like, what am I going to do? And then now it's like, okay, bigger losses. Okay, I'm used to it. It is what it is. And, but it's definitely a work in progress.
It needs to get to be normalized first. That, of course, is something you need to do the work on as a person and normalize things and normalize money in a way. But it's definitely the generational imprint we get. And of course, we carry energy of our ancestors and stuff like that. And we can decide when we're alive if we want to change some things consciously, because we decided, it's not very useful to think this. So can I embrace like a different belief that actually I believe is more useful to believe? Because in the end, nothing's wrong and nothing's right. It's just what is right for you right now. That's the only question you need to ask. So it's not like, is this the truth? No, is this useful? That's the only phrase you need to ask yourself, because truth is, no, it's nothing.
Yeah, exactly. Isn't that just what change is? Like, if I want to change as a person, you're literally just saying, I have to change the way I think, or think in a different manner, or believe in a different thing, that, hey, I'm actually capable of accomplishing this thing. And so you have to make that change internally first, and then through that it reflects on the outside. But you have to make that change. And I feel like that's just what it is. Like that's what it's absolutely mandatory to do. And sometimes you're stuck in this old way of thinking and wanting more, but not willing to make that change. But you have to make that change first, and then through that change, your life starts to change, and your physical environment.
Definitely. Yeah, that's why I really believe in the be, do, have mindset. I don't know if you're familiar with that.
Yeah.
But most people live the have, do, be mindset. If I have this, then I'm going to do that. And then I'm going to be successful, healthy, whatever it is. But the thing is, you create a gap. So you come from a place of scarcity now because you think once I get there, then I'm going to make sure I feel good. No, you have to be feeling good right now. You can already tap into the feeling of what you actually want when that thing is here. And once you start doing that, because everything in the universe is energy, what you send out is what you get back. It's like a radio frequency. So once you start noticing that, if you start feeling better already right now, you just start to attract things. You were like, first I was chasing it like a cat you want to pet somewhere, but it's always running away.
Exactly.
No, just lean back, let it come to you.
Exactly. And it's so funny when you're chasing, it's always within arm's reach, but it's just never, it's just never. A little outside. You know what I mean? You're always just, it's always so close. It comes so close, but yet it's always so far. And that's just because you're right. I think that there's that gap between who you believe that you are actually down to your core and what you want to achieve. And by you saying, I want, for example, that inherently means that you lack that thing. And so instead of saying I want something, or like it's all about the words that you're using. And I've really found that to be incredibly impactful as well. And I can see that you have in your life as well, that where it's like, yeah, you just have to act as if you are that person already and you have all the things that you want. And how would you act? And you have to embody that and then continue putting in the effort. And eventually over time, and then it's just about time. And it's the same thing with trading. As soon as you let your strategy work over the course of time, you don't try and force it. You don't try and hit big home runs. You just let it work. And over time, you look back and you say, wow, I have done a lot more than I thought I was going to be able to do. And that's pretty incredible.
Yeah. Always when I try to go for the home runs.
Oh, that's the worst.
Worked. Oh my God.
Yeah. That's the automatic strikeout. That's the automatic.
But that's just the thing. If you focus on the lack, you get more lack. So
exactly,
it's just what it is. So you need to start focusing on what there's already here right now. If you start from a place of appreciation and a place of already feeling good, then it's really simple. Then if you feel good, then you feel more inspired action. And you feel like, maybe I should do that, or I should do that, or should that. And then you start collecting that data, but you do it from a place of, this sounds fun, maybe a little bit fear, but let's try it out, and more like curiosity. I think that's the best way to bridge some things when you are not really sure. Just become curious.
Reduce the expectations and just be curious. Enjoy the whole process. I mean, we live one time, and it's okay. Like you're not going to be perfect no matter what you do, even if you've been doing it for years and years and years. I still make mistakes trading that I'm looking at myself after. I'm like, what are you doing? You know, like it's just mind blowing sometimes, but that's the human element. And if you're, I used to be in biochemistry, used to study biochemistry in university. And I always think back to that time. And when you were doing these experiments, you always accounted for a margin of error. Always. Yeah. But so why don't we do that in trading? Why isn't it that? Why don't I account for a margin of error in my own trading? And then if you do, you say, hey, maybe 10 of the 100 trades are going to be bad. They're just going to be terrible trades, and that's okay. Like that's completely fine.
Yeah, but that's also that's accepting that perfectionism doesn't even exist. It doesn't exist in nature.
Yeah.
If perfectionism were actually a thing, then every tree would be the same. Because if perfect would exist, then every tree would be the same. But that's not it. So perfectionism is a man-made thought. So even in trading, 100% win rate, it's freaking impossible. So just accept that it has a margin, and then you're fine. So
and then you're good.
Lose the perfectionism.
I love that. 1,000%. 1,000%. And so, I guess now would be a great time to dive into your strategy and understanding the way that you view the market and how you trade. Sound
exactly.
good?
Well, definitely. And I thought about what I wanted to share because I trade a few strategies.
Okay.
But what I think is the most helpful thing to show is a way to get in on the trend. And I like to trade intraday. So that's what I'd like to dive into. Yeah.
Yeah, that's perfect. Let's jump on the charts then and kind of show us how to go about it.
Definitely. Let's do that.
Excellent.
And I will put you to my other screen.
Yeah, perfect. It's already up now, so you're all good to go.
Right now. Great. All right. So I prepared a little bit for this, and I just want to go over a little bit of like the little theory, and then I'm going to show you one of the trades I took 2 weeks ago with Perfect. This same thought process. So what I love to do actually is trade intraday. So that means that I like to ride a little bit of the daily range. So what does that actually mean? Well, if we have a daily candle, we always have a open price. We have a low forming that will become the wick. Then it starts expanding, and then we start to close it out again. So on a daily candle, that would look something like this. We start out bearish, and it, of course, it moves like this. We don't need to do the animation. And then it starts out coming up, making the high of the day, and it's becoming green. And then it closes out right there. So we have an open, low, high, close. So of course, that's the same thing for a bearish candle. It opens high, green, and then it starts closing bearishly. Well, with that in mind, I always like to see, all right, will I hop in on a long on the daily candle or a short on the daily candle? So if I am bullish, I want to see if I can hop in on the candle. So I have 2 ways to do this. Either I will hop in on the candle, the wick, or if it's not clear yet, I want to hop in on a continuation going up, so somewhere in between. So the trade I'm actually going to show is where I got in on a continuation, because on the daily chart, we did not have like a clear low to make. So ICT style of trading is more looking at imbalances, gaps in the chart, something like that. So what I was looking at on this day was consolidating. So this was a hard read actually on the daily. But what I found out on the 1 hour is that I started seeing something that I love to see. Well, first of all, let me show one thing, because I had a point of interest, because on the daily I wasn't seeing anything, but on the weekly I was seeing 2 specific gaps. And this is a gap between the opening of the weekly candle and the closing of the weekly candle and the opening. So this is a new week opening gap, like ICT likes to call it. Here we have the same thing. And it was already bouncing from here. But as you can see over here, it did not trade back into that at that moment. And this is a wick. So this is the path. This is not a candle. So what I was looking at is, all right, if it's bouncing here, it's very likely to come up again. So that was the point of interest I was looking at. So here you can see we have both gaps on the chart, just really simple. And I was looking for a way to get in on some sort of trend. So either a bearish daily trend, meaning pushing up, coming down, or this bullish trend, coming down, pushing up. But before that, I didn't know which side it was going to go to. So this was the daily open. Here we opened and we started pushing lower first. In Asia, a little bit up, London down, and finally we came into the AM session. I was like, all right, let me see if it finally can show me something clear about the daily range. Well, we got some news somewhere in here and it gave a massive push up. So now, because we had this massive push up, I still had this POI in mind. And I was like, all right, it respected this one. And now I see a really nice bullish engulfing candle here on the 1 hour. So what I did was this. I waited for another gap to form, because in my opinion, the gaps tell the story of price a lot of the times. So once this gap over here formed, and this is what ICT calls a fair value gap. So we have a gap between 2 wicks this wick over here and this wick over here, and we don't have any sell side delivered here. So we only have a green candles, meaning only have buy side on that side. So what you see a lot of the times is that price wants to rebalance that and then go up even more. The other thing for me was, if we measure the distance between the two new week open gaps, we see a 50%, so equilibrium over here. And once it pushed through that equilibrium, it's high likely to find some sort of support here and go up to that new week open gap. So this is what I was looking at. And then I hopped into a lower time frame chart, and I like to do 1 minute to 5 minutes, something like that, and wanted to see if price could come rebalance the gap somewhere in here, maybe tap it, maybe somewhere in the 50% level or even at the lows, and then see some form of bullish order flow again, because this was the massive push up. This was high time frame bullish order flow, but now I want to see if I can get in on a retracement leg once it starts to show bullish order flow again. So we got to push down. So right now we have a little bit of bearish order flow, creating the retracement leg. And what I like to look for is if it starts flipping gaps. So we have another gap here. And once price starts to flip those gaps, that's when I know price is gonna be back to bullish order flow again. So right now it's still respecting those bearish gaps in this case and pushing lower. And here it filled the complete gap. At one point, let me see, was it this? I think it was this gap, but if I remember it correctly, it was on a 3 minute. Yeah. So on the 3 minute, I sometimes flip. Sometimes I look at 1 minute, 3 minutes, but I like to see a clear gap. At one point, I saw this. It pushed through it and did not respect it. So the candle closed above the gap. And this is where the entry point was, because I want to see this gap then act as a support level, because it wasn't resistance anymore. And this is where I got into that target of the new week open gap. So if you push it once more, you see here, you get tagged in. And that's where price started pushing up eventually. So what you can see over here is very clearly that I was looking at a higher time frame if it was a bearish or a bullish day, and looking for the signature, either manipulation low and ending higher in a bullish day, or either manipulation high and then pushing down lower. And in this case, because the daily did not show a clear gap here where I could get in on, I needed to wait for the sessions to play out and give me that signature of showing this placement candle higher, knowing that it wants to reach higher. So I think this is a really great example of how you can hop in on a trend and do it by following the gaps and see which ones are getting violated. So this bearish move got violated eventually, becoming a bullish move. And it was in a 1 hour fair value gap. So it's a really clear point for me to get in on the trade. So that is actually the model in itself.
I love that. I love that. And it's super clear, and it makes a lot of sense, honestly, to me, especially because I trade very similarly. And so, but for someone that doesn't know, is it typical that you start off on the 1 hour? Do you start off there and you say, hey, I'm looking for a daily or a daily bearish candle, for example, or in this case, because it's bullish, we'll say you're looking for a daily bullish candle. Is the next step to wait for a gap on the 1 hour to form and kind of go in that same line that goes the open, low, and then it starts going to create that low to that high? Or do you go to different time frames? How does it look?
Yeah, it can be 4 hour, 1 hour, 15 minutes. It depends a little bit. In this case, It was, of course, a news driver. So we had a big displacement. But you see it a lot of the times, this specific pattern, let's call it a pattern, that it trades, for example, lower in London and then displaces on the 15 minutes and breaking market structure up. And I also, on my YouTube channel, I call it the New York session strategy, something like that. And it's a really clear and clean setup. And But that is only when it forms like this, you get that like clean setup, and you get maybe a displacement higher on the 15-minute, and you can hop in on that.
Okay, so it's not specific to just the 1 hour. It's essentially whichever time frame that is most clear that operates in the same direction as your daily bias.
Yeah, and for example, in this case, it was really clear like one gap on the 1 hour, because maybe on the 15 minutes, I don't know if, let me check, maybe there were multiple gaps. No, it was also one gap. But if these are multiple gaps, then I'd like to hop in on the time frame that actually shows one gap, because that helps in like clarity, and just show one gap and look then for a lower time frame. Maybe there was even a different entry model on a 5-minute. I don't know. No, not really clean. So for me, it's a lot of the times those inverted fair value gaps that I like a lot, because they tell the story quite quickly, and you don't need to wait for a market structure shift, because that one wasn't even there.
Exactly.
It was not even a 1-minute shift, but I already knew, all right, if it filled this gap, it has no business left here. So it's done.
Exactly. Because essentially the fair value gaps, or PD arrays as ICT calls them, they should be like the stepping stones towards that final destination. But once they hit that final destination and they start breaking, that's a telltale sign that, okay, it doesn't want to go there anymore. We could be in a different different program. It could be in a buy program now. And that's the initial indication, as opposed to it having to break market structure. So I love that. I also use that as well. Using the gaps as like the gaps in the opposite direction, once they break, those are a really good telltale sign, like, okay, things are changing.
And this even tapped like the order block here, but it doesn't even need to do this. A lot of the times you just see the 50% or even just a little wick in it and just pushing up. So you really need to monitor then when on low time frame the bearish order flow gets flipped again. And I love that.
Awesome.
So and eventually you get like a daily candle.
Is there a specific like take profit kind of management system that you use, or stop to break even? Like how does that look?
First of all, if it does something like this, a gap, it should not violate this low anymore. So this is like my protected low for me. So this is always where the stop loss goes, but I've here. So a lot of the times, if I do this more on a scalping basis, I always take the TP at the high and just get out. But if it's more framed around the daily expansion, I really like to look at a 1 hour, 4 hour daily to see if there are gaps. There was a big displacement. Yeah, this massive displacement candle was also a news candle. And a lot of the times you see those get filled. And so with that in mind, but because I did not have like really clear things here, I was just in this case, I want to go for the new week open gap. It depends a little bit, but I love to go for the gaps. Gaps,
awesome.
And sometimes, of course, liquidity points. But in this case, it was more sensible because higher 4 hour was a little bit more bearishly. This was a retracement leg. You always need to know where you are in the bigger time frames. But to me, it made more sense to only trade a piece of the daily expansion, because if I believe this one went, it went up higher. It actually took this high in the end. But that was not what the trade was framed around. It was just this, take a piece of the expansion move.
Exactly, and you really only need a piece, right? Like that's a little piece of the pie, and you're done.
Yeah, exactly. Because you can see over here, and also because this is the AM segment within a kill zone, as like ICT likes to call it. But of course, this is where the volume is. So I believe the algorithm like delivers price faster because the more orders are coming in. But you can see over here the new week open gap, it started consolidating, and I really get headaches when price it started consolidating and coming back. I'm like, oh, no, I just need to get out. I hate it. I know my personality, and I just literally get headaches when it's not either moving fast and give that low resistance liquidity run as I like to love them. And this I don't like. So this is like the low hanging fruit, but I knew it would go for the gap in this case. But that's just more of the experience, of course, I have. So but in the end, it pushed through. So
yeah. And that happens, right? And there's nothing to
and that's okay.
To feel bad about. Exactly. It's just, hey, you got your piece. It went further than you wanted to. And if anything, that instills a little bit more confidence in you, and you just keep going from there. Really.
Yeah. The thing is, a lot more times it reverses on you on those PO.
Exactly.
And I learned that the hard way.
Yep. Yeah.
So I definitely just want to get out and just take. I mean, 3R, that is freaking more than enough. If you have 3R in a week, you don't need more than that. That's what people always forget, is that they don't need more R, they need more capital if they want. But don't change your whole trading strategy if it works. That doesn't make sense.
Exactly. I know some really, really amazing traders that have 1R trades that are literally 1R traders, and they're trading, $20, $30, $40, $50,000 per trade. Like, so you have to realize like there's money to be made at any R multiple, and you don't have to swing for the fences. You can get something that's nice and consistent. It pops up pretty frequently, and you can just continue on that every setup that pops up. I was going to say every day, but I didn't want to be promoting it.
No, I get it. And exactly. And also sometimes I scalp a little bit when I like it. And most of the times those are even below 1R. That's just whatever you can take in a little run. But that was one of the things that doing better backtesting actually really helped me see that you don't need a lot. You just need pieces. Just grab pieces of profit. And before you know it, it just multiplies like it's crazy. And now even with FX replay, it's a lot faster. And of course, that also has its downsides in the sense that when I'm really like fast back testing, I don't feel the emotions, because then I start clicking through it and like, oh yeah, it worked. No, this was a loss. This was a win. This was a loss. And once you're in real price action again, and you see the candle going like this, and you're like, oh.
For sure.
All right, you definitely need to train that. But yeah,
exactly. No, and this is the thing. I we talk about it a bunch with traders that we meet and everything. Trading or backtesting with FX replay, for example, is a tool. And it's just another method of practice. It's just like any sport. You're not just going to be shooting, if you're playing basketball, you're not just going to be shooting 3-pointers. You're going to be, running and doing layups. You're going to be passing. There's an array of different exercises to be doing. Backtesting on FX replay. There's a million different exercises you could do within FX replay as well. But there's also, you do need that live experience, and for sure you do. Absolutely, there's no question about that.
But what I really, really like is the fact that with using something like FX replay, you can like faster normalize the amount of money, but also because you can do things faster, you can get data faster, and you can see what it can do over time. It like brings your future more like to the now, because you think, all right, so that means that if I do it like this for 6 months, this is the result. So you can normalize that, because otherwise you start to keep chasing things and you never reach it, because you try to go for the home runs.
Exactly. And you also have never proven it to yourself, right? Like you've never proven it to yourself in the live environment. Like if you're a beginner, that you can actually do it. And so having something on FX replay to say, hey, I've backtested for 6 years and I've proven to myself that I can trade. And like, I didn't fast forward price or look back at price. Like I just did it as if it were the live environment. And you're proving to yourself, hey, I can do this if I just follow these rules. And it kind of just instills that confidence. And ultimately, at the end of the day, I would argue that the difference between a profitable trader and an unprofitable trader is confidence in their skill and knowledge of their strategy. Because that's all, everyone sees the same market and they're clicking the same buttons. It's just, when are you going to click it, and how are you actually going to click it when the opportunity presents itself?
Exactly. And everyone can be long and short at the same time. So you can be short and I can be long, and we can both definitely be right within our strategy. So everything is good.
Exactly.
As long as you know what you want to do. Yeah.
Yep. It's your experience with the market and how you read it, and just learning how you see the market, and just keep on doing that and not trying to copy someone else's strategy because they made X amount of dollars or whatever. It's just, hey, this is how I see the market. Go and test it and learn some things for yourself and find what your eyes see better than mine, and then incorporate that into your strategy. And once you have that, you're set. You're good to go. Yeah,
definitely. And the only way, confidence comes from proof. There's no other way around it.
Exactly.
So that's it.
Exactly.
Yeah.
Kirsten, this was Awesome. I really, really, really loved having the conversation with you and genuinely appreciate your time.
My pleasure.
And yeah, thank you so much. If you want to let everyone know where to find you and if they want to be a part of your group, please let them know, and we'll attach it all in the comments below as well. So no sweat.
Yeah, great. I will let you know. And of course, yeah, people can follow me, 5D Universe Trading on YouTube. I also have a community with course ICT Simplified, because a lot of the time people don't get through the videos of ICT. So I simplified stuff, and yeah, they're welcome to join if they like. And yeah, just follow me on Twitter or YouTube if you like, but do whatever the hell you want, as long as it resonates. Sovereignty, right? I stand for sovereignty. So yeah.
Likewise. We're just providing the resources available, and it's up to you to choose if you want to use them or not. But yeah, we'll leave everything in the description, and yeah, that's basically it. Thank you so much again, Kirsten. Really appreciate you.
Yeah, thank you for your time and the awesome questions and the great deep conversation we had. So I love that.
Of course, no worries. All right, we'll catch you guys later. All right.